Today's video we'll be talking about um, advanced market structure. This is to give you an insight on how professional traders trade. So you all that have been following me, the first series is over and this is the second series. So I want to dive deep into advanced market structure. So firstly, market structure tells a story. It tells a story between the buyers and the sellers. Every high, every higher high, every lower low, every pullback, every breakout. It tells us who's currently controlling the market. So instead of memorizing patterns, you learn to read the story price is trying to tell us. So trends are built in waves. The market moves in it doesn't move in straight lines, they move in waves. You can clearly see my chart right now. They move in waves. There's no straight line horizontally or vertically. They move in waves. They move in waves. So what you need to understand is an impulse will move the trend forward. A pullback allows the price retrace before continuing or reversing. So understanding these waves as traders will help you understand the story that price is trying to tell. So many traders draw structures once and never update it. Professional traders understand that structure changes as new candles form. Every new swing high or swing low adds new information, and your market bias should adapt when the market provides new evidence. So reading control, instead of asking is the market bullish, who is in control, if buyers continue creating higher highs and lower highs and defending higher lows, buyers remain in control. If sellers continue creating lower lows and lower highs, sellers remain in control. So it's that simple. It's that simple to understand that once the buyers are creating higher highs and they're defending the higher lows, which means there's no breakout to counter trend, the buyers remain in control. Same goes for the sellers. So control matters more than prediction. You need to understand those things than just sitting and trying to predict the market. So market structure and decision making. Professional traders rarely enter a trade based on one candle. You don't just go and say, oh, I'm going to take this trade just because of one candle. They use market structure to filter opportunities. Market structure is very important, and that's why I chose to treat the advanced market structure following every other one I have taught. So a buy set up against strong bearish structure carries more risk than one aligned with bullish structure, which is why I tell you don't counter trade. I'm always against counter trading. I tell you don't counter trade. Check the overall market structure. If it's bullish, don't look for bearish. Don't look for sells. If it's bearish, don't look for buys. Do you understand? So you have to stick to that and know that, oh, it's bearish, so I should be looking for sells and not buys. Do you understand? So it's very important to recognize those things while trading, which is why you must also add them in addition to other confluences. And I'd like to look into top-down analysis. They really, really go a long way than people would think or people get to admit. So many people just believe that you focus on only entry, they ignore the overall trend, they mark significant, insignificant swing lows, swing highs, change bias too quickly. And the truth is the solution is patience, okay? Allow the market to reveal its structure before making decisions. Those of you already know what market structure is, so clearly this will just be another, which is just me talking about an advanced one. So let's get into it and talk less. So like I told you, price don't move in a straight line, whether horizontally or vertically. It moves in waves. You can see all of this, regardless of how you want to call it. you get to this point, you can see all the waves, or it ranges, it goes, it comes. Do you understand all of that? It just clearly shows you that at this point you can get to decide what's happening in the market. So here is a higher time frame. On this higher time frame, you can clearly see. Let me give you the overview of it all. This is it. This is on BTC. You can clearly see this. What's the market structure? What's the directional bias? It's bearish. Obviously, it's bearish. Nothing counters that. It is bearish. You can see it coming down at this part, and then it pulls back into it to respect this part, and then this just comes back in to retest that level, this level, giving us a pattern which gives us a double top at this point, and then price expected to go downwards. Like, that's how easy it is. There's not so much. So at this time, you know that the sellers are in control 100%. It didn't even make a deep retest. Usually most people would expect price to, oh, we're coming back here, this is the last support on this side, it should come back to this part, it should, you can see where it got to, only respecting the opposite on the left hand side, and then same, created a double top at this point, and then it's going to take it downwards. That's another level. It's not just random market structure. There's a pattern there. There's everything you need to understand there. This is on a daily time frame. So if I'm to go down to a 1 hour time frame, you would see this is the point where I talked about the equal top. They're in the same line. Even though the other one is just a week, they're still in the same line. So you can see that the only reason we have bullish moves here was the retest back to this level, and then here it goes this way. Now, one thing you need to understand is price move in zones, and it's not just going to just randomly break every highs and every lows. It will not randomly. I'm not saying it will not randomly. Not that it's going to, but it's not going to happen randomly. It's going to happen zone by zone, bit by bit, structure by structure. It's going to respect every structure until it's done before it breaks those levels. Which is from this point, let me show you something. Now, price gets here. After it gets into this point, you can see it gets here. Now, when it got to that point, you're expecting, you can see on the other hand side, there is a high there. It's not just going to break past there. It will, but it's going to have to make a retest. It recognizes that there is something, there's a resistance there, and it's a support. So that's the resistance support line. So it's not just going to just break past it. For those of you that trade supply and demand, same thing. It's not just going to break past it. It's going to recognize that I have something on the opposite side. It's going to bounce off there, and then it's going to go backwards, create that double top. If it was a reverse case, it would create double lows and still give us the pump to the upside. Now you can see it got there, it bounced off it, and then it went back. Only retested the top because this is the only reason why it's returning, is for structural reasons. For structural reasons, and not just because it's an uptrend. It's just trying to respect structure. So that's why it respected this part, bounce off it, and it goes back. Now we're not expecting it to break past that level or this level. You know why? Because it's respecting structure, and that's the only reason it moved upwards back. It has to take that move backwards before it comes. Now it coming back to this level, which respected this part, and then it coming back to this level. Now this is what's going to happen at this point. It's going to get here, which is why you see that at support and resistance levels, when price get there, it ranges a little. If you go to lower time frame, the higher time frame, mostly the lower time frame, you will notice it's ranging at that point. It has to respect that structure. But if the momentum is very solid, then it's only going to range and then break. If it's not so solid, it's going to take that pullback, look for the nearest support or resistance depending on the trend, and then it's going to come and then break it, which is this point. So you see, at this point, there's an opposite side, which is you need to learn how to look at your candles and understand that no matter how little they are important. So opposite here, you can see price went up, came down. So if you go to a lower time frame, there's a support level there. Now when there's a support level there, you can see on the opposite side, price got there, came down, and then it went up. So it has created another very little support at that point, but it's still very much to be considered. And then it creates that, just showing you that I have to respect what's on the other side. It moved backwards a little. Do you understand? Move backwards a little, and then boom, it comes down. Now if you go to a lower time frame, there's a support here, price is already within that level, and now it's going to break it. Now when it gets to this point, which is an external structure, now that's internal structure. The internal structure, it still respects it. Now this is the external structure because this is a 4-hour time frame. It's high. This is an external structure, which on a higher time frame it will still be an internal structure. So the time frame is what makes it internal or external. So on weekly time frames, you know your 4 hours is probably internal structure if you're looking overview from what weekly time frame or monthly time frame. We're looking for your daily 4 hours is slightly an external structure. Where I would love to look at internal structure mainly from would be from the 1 hour, from the 30 minutes, from 15 minutes. All those are internal structure. And everything that happens there is the internal structure of the market. This is the external structure. And everything that happens outside here is why the lower time frame moves the way it does. And everything that happens in the lower time frame reflects on the higher time frame. And if you're able to read those very tiny candles still from the outer external structuring, you'll be able to understand a lot. So now it's going to get to this point, and then it's going to also do the same thing that it did at this point. So it might not be so clear because this is a 4-hour time frame. If you go to the 1 hour to 30 minutes, which I call the internal levels on time frames, you would notice all of those things there, and then you would notice that it's going to have to respect that, go back, touch another support because it's a downtrend right now. So it's going to go back to support on a lower time frame. You might not even reflect here, which is why you need to learn how to read the candles. Those little candles that you just see them everywhere, they're not just little candles. They're creating something massive on the lower time frame. Sorry about that. On the lower time frame. So it's really important to recognize those things. So that's what happens, and then price is going to behave the same way, take a little pullback. On the lower time frame, it's a big pullback. On the higher time frame, it's very little pullback. That might mean nothing to you, but it's important. You have to go down there. If you trade breakouts, you have to go down there to be able to refine your entry before taking a breakout around here. And then boom, this is the next level. Now there are other little levels like here, like here, like here. You can see them very little, tiny. They're very, very important. So you know that you should be looking out for this power when price gets to these levels and this level. They're very, very important. And if you move to the upper time frame, the higher time frames, you also notice those other structurings. They're very much POIs, points of interest, and price are very attracted to them. Depending on you have to apply all of this with the bias as well, the directional bias. So yeah, that's pretty much it. There's not so much to it, so you need to learn how to read it, the internal and external structure, even from just being on the higher time frame. For instance, I don't even need to go to the lower time frame. You can see all of those already happening. So, but I'll take you there. So this is 30 minutes. You can see that all of those things, you can see them happening, and then this goes back from little into there, this comes back, it goes to this has already used this to come down and support there, that resistance meets it, this comes back, meets it. You can see It's 30 minutes, but that's what's happening down here. So it's important for you to also move on time frames. Don't just sit on one time frame and think you're doing the whole thing. It helps you see clearer. So yeah, I think that's pretty much it on advanced market structure. You need to learn how to read your charts like that. And yeah, you can use XNext. You can use TradingView. I'll drop the link in my in the description box. You have a nice day and stay tuned for the next video.